Well, good day, all. Ira Epstein of Linn Associates with your metals market update. And here we are on Wednesday, and this is the 17th of July, 2019. And the time at this moment, well, we're sitting here right now about 4:20 p.m. Central Daylight Time. Now, before I get too far, I'm not going to be in the office tomorrow, Thursday, July 18th, but I will return for the weekend edition on Friday. So I'll see you all Friday after these evening videos. Big breakout to the upside, or is it, in the metal markets? What's really going on is the stock market took a nosedive. Netflix earnings missed, a bunch of other things going on there. We're seeing the dollar down a little bit. We saw bonds and notes giving back yield all of a sudden. And the question is this market starting to break away from what the stock market was doing and yield? I don't know. We're going to find out, but that's one of the things that is going on there. If you looked at the API and the EIA numbers as you went into the energies, they were just plain bearish. We're building, again, inventory. So when we take a weekly area chart of closes, the market's up $11 for the week at 1423.30. You can see that the market is still in this broad congestion zone, and that's why I said, even with the market up this much, is it really ready to pop out of that? That's going to be the question traders have to ask themselves. When you look at what's going on, you have a pattern of a lower low. You did have a huge outside day to the upside today. You took out the lows of yesterday, the highs of yesterday. You closed higher on the day. When we look at the moving averages, the market has been fighting a battle against the 18-day moving average quite a bit. Today was just another one of those, and it resolved to a degree to the upside. But if you pull back in the market, where do you think support is? I'll argue it's back at the 1409.80 zone or wherever the 18-day average shows up tonight. In terms of resistance, I want to get back away from today. We had talked just yesterday. Notice how these numbers are honing in on the market. And what happened today is even with the rally, you went right to the Bollinger Band. That number's 1427. You got as high as 1428.40 and you finished at 1423.30. The last trades of the day were knocking on the door of that upper Bollinger Band. So the momentum is there. The question is, can it push it out, or is it just going to run into that brick wall again? One of the things I tell you is the first time you hit a Bollinger Band, I expect to see pros take some money off the table, and that's what I think happened. You now have momentum trying to turn up. The bias is certainly up because you're over the 18-day average of closes, and you're into a resistance zone capped by these other areas, the 1440, 1450 level. Doesn't mean you can't break through it, but you need a catalyst of some type. When we come to GLD, first thing my eye goes to is I'm overbought. Second thing, the pattern is a lower low, higher high. Third thing, you hit the 18-day average, came up, upper Bollinger Band, could offer the first resistance. Again, I would expect that after you hit an 18-day average, the first challenge of an upper Bollinger Band, or a lower one for that matter, is where pros take some money off the table. GDX is stronger than the futures or the ETF GLD. It's maintaining this pattern of higher lows, higher highs. Now, yesterday the market did not get to the upper Bollinger Band. Today it did, and it closed over it. Now it's got to prove it can stay over it. It is overbought, over that upper Bollinger Band, and it's hit another target. It's had a habit of hitting that upper Bollinger Band and then pulling back a little bit. We'll see if this is any different. What I'm happy I did call for traders was this first move under that 18-day average. Look at how this market has come in. It's not the biggest move in the world, but from 93.33 to 89.12 is 4 ounces, if you think about it, of silver. This represents how many ounces of silver you need to get 1 ounce of gold in a perfect world with no commissions. It's just taking the August gold versus the SEP silver, so I'm using the two, what I call the two really nearby contracts to go with. When you look at silver, I thought the market yesterday was over the upper Bollinger Band and going to pull back, so that wasn't right. But the trend is up, and you're making a run for the upside. So you're 2 days in a row over the upper Bollinger Band. That's a sign of strength. You've got the 18-day average over the 100. That's a sign, but you are overbought, not even getting close to an embedded reading. There's no reason to be bearish. The question is, where do you take money off the table if you haven't done it already? In the copper market, you've pulled back, as we were talking, to that 18-day average of closes. And how many days have you hit it out of all these trading days? Think about that. This is a market caught in this sideways action right now. The trend is up. You've got higher lows, you've got higher highs, and you have momentum pointing to the upside with the bias up. Resistance back up here now at 274.50. What would break this bit of an uptrend is currently taking out 267.25. The question is, can the market get to the upper Bollinger Band? If it pokes its head up, then if this number should be taken out eventually, can it get down to the lower band? We've defined the trading range by the last time the market hit both those bands, as you can see. In the platinum, you're in that resistance area that we talked about yesterday, the 100-day in the upper Bollinger Band, and you are overbought. The market's got to prove, can it run or not without that? And all you did in the Palladium market, which has turned out now to be on the weak side of all these gains, because it had another one of these beautiful runs, is it got back to the 18-day average. It didn't prove anything. The market's still in a downtrend at this point, short term. Lower highs, lower lows, resistance here. The market still has momentum pointing to the downside. And last, in the dollar index, you've got that higher high, lower low. If the market decides to pull back, this is the support zone, the combination of the 100 and the 18-day average of closes. You know, one of the features that we offer here is what we call our price count chart. I haven't talked about this in a long time with you, but in a nutshell, we have devised a formula. If you're a Fibonacci or a Gann person or a swing line person like I am, it's something you might want to get. And you can get it by going to our website. You'll see our free offers. Just click it and you'll see chart of the day is one of those, or call my staff. But you take what's called a count, such as you get a high point, low point, or these 2 points right through here. And when a market starts moving like gold is doing right now, we've already hit what we call the third price count. It's rare you get to the fourth count, but it's there. And what that count number is, and by the way, there's the next indicator that we have too. I forgot that I shouldn't hit that, but I did. But to make a long, by the way, this is pretty cool because you're getting to see all the different offerings we have. So if you go to our website and you click on, you can get all these different parts to it. How do you get it? It's really simple. Give us a call at 866-973-2077. You can go to our website also, click on any, and away you go. I'm Ira Epstein. You have a good day.